Traders make decisions based on red and green candles. But what if those candles are only showing you half the story?
Human traders need 200 to 500 milliseconds to process information and react to market changes.
Trading algorithms react in microseconds, literally 1,000 times faster than human thought.
By the time you see a price move on traditional charts, algorithms have already positioned themselves.
Orderflow reveals institutional positioning before expiry events, seeing the game within the game.
Weekly expiries create massive position unwinding. Traditional analysis misses these derivative-specific forces.
Stop reacting to candles. Start reading institutional intent. Join the e-course now. 4,909 for lifetime access.
In Indian markets, derivatives volume is 10 times larger than cash. Most market activity is invisible to traditional analysis.
4% of traders lose, not because they aren't smart, but because they chase candles and ignore what institutions are actually doing.
Our 12-video e-course reveals how markets actually move through order flow and market profile. See the forces behind price, not just price itself. Every price move is just the surface. Dive into demand and supply if you want the truth.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. Welcome back to this session, guys, and hope all of you have had a fantastic Diwali, and wishing all of us a happy new year, and let us move towards achieving that independence in the world of trading, where we follow our process and make sure that we are getting green M2M on a day-to-day basis. So a quick start to this session. A quick brief about what we do at VLD, Vtrender. We follow market profile and order flow to understand the structure and the equation between supply and demand. So I'll have a quick run through what has happened today so that we can relate with the latest happenings. So we have the market profile chart on the left and the order flow, 15-minute order flow on the right. So market profile tells us the structure. We had a big gap up open today, and we needed to identify the open type, which was an open auction out of range. Why was it an open auction out of range? Because it remained in a narrow range after the open. Yes, we had this big initiative buying tail where the POC was at this 26085 in the opening 15-minute bar, and we had huge volumes. 30,000 contracts is almost 4 times the normal volume which we see in the first 15 minutes. So once you identify the open type, it makes you prepared for the day, that what kind of trades you can expect. So whenever you have an open auction out of range, all of us at the VLD knew that it could be a range bound afternoon. We were extra alert in the G period because an open auction out of range most of the times gives a play in the G. But then even the G period failed to give any move today. But then we again focus on the K. And once the G period gave us a failed move, I'll just come to that in a bit. So because of this tail, we were bullish and we were wanting the buyers to show some more intent. How would have they showed intent? By making a range extension above the initial balance high. But they could not do that because you can see how on the 15-minute we are getting zeros when we are tagging the first hour highs on the buy side. So this is opposite to what we saw at the open. At the open, you can see we did not see any supply. This entire rows below this 26085, we have more of zeros on the sell side. We have this 748 buyer, 1164 buyer, 644 buyer. So it was very clear that this zone was showing us demand and lack of supply. But here when we were going to the first hour highs, this demand was drying up. You can see zeros on the demand side whenever we made an attempt to make new highs in the day. So that is what the order flow tells us. It shows us which of the buyer or the seller is trying to dominate at important references. So we made a C side where we did not make new highs, but we made similar highs as the A. So you can see how A and C both had similar highs. And then we went on to test this VWAP. We took support at the VWAP. So this 26110 was the buying tail, which was an important reference for the afternoon. And once in the G, we got this IB15, but again, the probe above the initial balance high got us only RS signals. So this is not giving you confidence to get into fresh long side trades. And once this IB low got broken, it was very clear that the buyers are now giving up. And we got one more reason, one more confirmation in the form of this DPOC shifting higher. This DPOC, which was at 26085, shifted higher after the G period. So this was very clearly telling that the longs are liquidating and it is no longer making sense to hold on to long side trades. When would that change? We needed to take this out with IB3s, which never happened. And what we did eventually later in the day, you can see how the G period made these new highs and immediately got rejected back into the initial balance. And once we broke this buying tail, you can see zeros in the order flow there. I'll just take you to the order flow part and you can see how beautifully you can see how you got zeros. IS15 has come. It has broken this important reference of the morning. And what have you seen here? At the break of that important reference, you are getting an IS15 signal. This IS15 gets triggered below 26075. 26126 is your stop loss. And accordingly, you look for targets on the downside. So here very clearly what happened, the buyers failed to act here. In the morning, we were not getting any supply here. But now because of the scene that the buyers have failed at the top, sellers have come back strongly at this point. And you can see these zeros, wherever the zeros are coming in the order flow, it becomes an important reference, not just for this bar, but also for the upcoming bars. And you can see how we went on to make lows. In this lows here, we saw some defense at that big round number of 26,000. 26,000 Nifty futures was like the buyers were trying to hold that briefly. So that is the reason we got this sharp bounce. But you can see where this bounce has stalled. This bounce has stalled right at the place where we got those zeros. 26085 was our reference. I'll just so 26085 was our reference, and you can see how this pullback has stalled right at the 26078. And this IB15 did not get triggered because we did not get above this highs. So, and this stalling at an important point and we getting zeros in the order flow here, it was very clearly telling us that the seller has now taken control. And this was just a pullback. Once we got back below this IBH again, it was very clear that the structure this day structure is going to be a neutral extreme profile, and neutral extreme will close at the lows, and that is what happened. We've made new lows in the K, L, and then into the M also. So this is what the market profile structure wise gives us as an understanding what kind of trade was expected. And how do we trade that? We trade that using the order flow, using these IS signals, and looking for failures of buyers. So this IB 15 breaking was a fresh signal that new lows are coming into the day. And this is what we did. We made new lows in the K, L, and MTPO. So what we have done today is we not only left a failed auction here, 26173 is the failed auction. We completed the 180R target, which was at 25983. So we have completed the 180R target and we have closed well below that. Although the adjusted close may be little higher, but that 25983 would now be our first reference on the upside going forward. So this was what was the market profile and the order flow telling us. So this is clearly telling you when your bias should be to the upside, when you should be patient and not get into any trade, and when you should be biased for a directional move. So what was the first sign today? This failure by the buyers was the first signal. Then break of this buying tail with zeros in the order flow was the second reference where your bias was changed to the downside. Yes, we did get this bounce, but this bounce stalled right at where the morning reference, the first POC, first 15-minute POC. So when that is showing you change of polarity, you know that again the demand is drying up here, and sellers again came back strongly to close it in their favor. So that is about the market profile and the order flow. Let's now move on to the next chart, which we use to get into quick intraday trades. So what is that chart? We have the VolumeX. We have spoken about this, the VolumeX of Nifty on the left, and we have the spectrum on the right. So what does the VolumeX tell? VolumeX is a simple chart which tells us which of demand and supply is dominant. So you can see at the open, the call VolumeX was rising and both of them were kind of diverging. So that is the reason at the open we got a move higher. We went on to make new highs in the initial balance after the open and this brief pullback. But then what happened after that? Then we were in a range. We were in a very narrow range for the afternoon, which was expected after the open auction. Out of range we got. And then here, this was the place where the auction changed character. So it was very clear here that the put VolumeX, the supply is now gaining above the demand. And this happened after that G period attempt to go higher, extend higher. So the buyers made an attempt, they failed. So now the supply was taking control. And from here, you can see how this only went in one direction and it just kept on diverging from this call VolumeX. So this VolumeX chart very clearly told us in the morning, we were looking for calls because this call was above the put VolumeX. But in the afternoon, after that failure of G, this crossover of put VolumeX above the call VolumeX and continuous divergence. You can see this is a very good swipe. This can be used to take long side trades in puts because this is telling us that the supply is far more than the demand. Same thing in the spectrum. What does the spectrum give us? Spectrum gives us the range, expected range for the day, which is 26,100 on the upside, 25,700 on the downside. This is the closing range. But in between, the upper range was at 26,200. But because we started correcting later in the day, it has come down. So it also tells us which of the inventory is being forced to change. So at the open, you can see because of the gap up, you can see this MBIS high was forced to go higher. So this is confirming with this call VolumeX going up. So this is telling us that the buyers are in control. So till this is happening, the inventory is being adjusted on the upside. So this is a bullish sign. But after which here again in the afternoon, we saw some minute change of inventory. But then what happened is this supply got over demand, and from there we started a slow probe lower. We not only stayed below this MVIS high, we came back to the gamma 0 level, we broke below this gamma 0 level, and you can see how the subsequent bounce stalled right at the gamma 0 level. So this is telling us change of polarity, and then you saw small inventory adjustment on the downside. So this is where you know that now the puts are uh, in for a scare, the put writers I mean. And here into the close you can see big adjustment on the downside. So when you are seeing this and you are getting IS signal in the order flow and you are seeing inventory being adjusted, all these are pointing to goods trading setups in that particular option. So that is what we need to do. We need to combine these setups, and the data in these charts are coming directly from the NSE. So we need to rely on them and go with the latest information, and according to it need to change our bias and look to trade in that direction. So this was what the VolumeX and the spectrum charts do for us. Next, coming to the next section, which is the micro balance chart. So what I'm doing here is I will just start with the simple micro balance chart, the candlestick chart of Nifty futures, and we'll see how to play out the micro balance which comes up. So what we are seeing, and this is today's chart because I don't want to give examples, good examples from before. Let us go with the latest data and let us analyze what has happened today. So what did we do today? We already discussed how we had an open auction out of range, and the open auction out of range most likely gives to a narrow range balance in the first half of the day. And that is what you saw. The first, it not only continued till the first half, which was the G period, it went on to be in a micro balance till the K period or the J period. So you have this nice 90-point range micro balance with the micro balance low at around 26074. So, and this high was around 26170. So it was very clear that once this breaks on the downside, you can look for a 90-point range with the stop loss being the micro balance high. Same thing on the up. And what happened beautifully today was you got this IS plus IS at VWAP at 115 after this failure of the buyers in the G period. And then when we broke this micro balance, you can see how you have got a IS3. So when you are getting a IS3 in the order flow on the shorter time frame at the break of a micro balance, there is no better trade setup than that. You are looking for 90 points from this 26075, and that 90 points was coming to 25983. And I mentioned this 25983 as being the 180R objective from this failed auction at the top. So you can see how all of them combine to give you the same objectives. And when more of the tools are giving you confirmation of the same setup, you know that this is a more higher probability trade. And you can see how this went lower. It did give a bounce, we saw that, and we even got an IB3. But this IB3 got stalled right at this entry into the micro balance, and the IS3, which started the move away from this micro balance, held, and this never got triggered. And then that is the reason we went on to make new lows into the close. So this is how you need to figure out when a micro balance is forming. You need to be patient about not doing anything till the time the micro balance is in play, because there was no trade after the first move on the upside till about G period. G, we were trying to make new highs, so we were waiting for IB signals to be printed at this IBH level for us to go long, but that never happened. And then we got this IS plus IS at the VWAP. This is a very powerful signal again. And then we went on to come back to this micro balance low, looked like it will take support. But then when we broke this micro balance low with an IS, it was very clear that we not only have a failed auction at the top, but we also have a setup neutral extreme structure to the downside. and so easily the 180 are from the FA and the first target of this micro balance matched, and we went on to hit the 25983 into the close. So that is how you need to make use of these micro balance chart. They are very useful, and on the shorter time frame they tell you when you shouldn't be looking for setups where there aren't any. So this was very clearly telling us that the micro balance, as far as the micro balance is in play, you need to be happy with small range, small points. But once you get a move away from the micro balance, that is when you need to be aggressive and you need to look to get into uh, good positions. So the same thing, micro balance. Now I'm putting this up for a call, and this is the 25900 call. Just like how we saw what happened in Nifty futures, even the call was making this micro balance, and once it made an attempt to break the micro balance, it came back into the micro balance, stalled at the POC, and then again broke here. So this break of the micro balance, you can see how it gave us a move lower, and this was a previous micro balance where it, once it entered into the micro balance, you can see how we did the 80% rule in this micro balance. So micro balances are not just giving you trades, it are also giving you objectives, correct objectives. So, and you can see how this bounce again could not get back into this micro balance high. So the trade using a micro balance is simple. You need to go short if we are breaking below the micro balance low. Your stop loss would be the micro balance high, and the target would be the first target would be the range of the entry and the stop loss. And once you hit the first target, you book part of your position, then trail your remaining quantity to cost, so that you carry a risk-free trade. And if the trend continues in that direction, you get bonus points. So what we can do is have a 3-window mode, which we generally do in the VLD, of the Nifty futures and the call and the put. So it gives you a very clear picture of what is happening and when a micro balance is giving you a trigger to get into a trade. So you can see how this call gave us an IB3 at VWAP in the morning. So this was a quick trade to the upside. It only gave us the first target and then it came back to cost. So that trade was over, and then it went on to test VWAP several times, and you can see it was not able to break above this micro balance high. And once it broke the micro balance low, it went on to give the lower objective. And same thing with this put. You can see the put also made an attempt to break below the micro balance. This is where the G period highs happened in Nifty futures, but they were not sustaining. And once we got back above the micro balance high, you can see how we did make an entry back with these two IS3s, but it only could make small uh, incision into the micro balance, and once it came back, it gave you that move of 63 points. So this 3-window mode, you can save it as a bookmark, the Nifty futures and the call and put, and you can follow the line charts on this. And whenever you have a micro balance forming, you need to be ready to know what are the references of our range, what is the range of the micro balance, and once it breaks out, you check in order flow what you are getting and accordingly look to trade that. So this is about the micro balances. We have a very good example in Bank Nifty futures also. I'll touch that at the after this chart. So we have seen how we use market profile for structure, order flow for equation between buyers and sellers, then the NTM VolumeX, which shows us which of the demand and supply is in control, and the spectrum, which is showing us the inventory and if there is any change in inventory which is happening. Then we saw the micro balance charts and how to trade the micro balances and how to make sense of the micro balance. And now let us come to this one more very important tool which we have, which keeps gaining the importance as you near a expiry. So we have the gamma exposure on the right and the gamma density on the left. The gamma density chart is based on the current inventory, which is poised for a close. What close is the current inventory poised for? Which this is seen in the gamma density chart. So this will keep changing as per the market, and people will keep having to change their inventory. So we need to follow this, and we need to know that what where the inventory is there highest and what is happening, whether they are being forced to shift or whether it is going to be an easy cakewalk for the writers. So right now you can see how the gamma exposure chart also is undecided, in the sense you have many peaks, mainly short gamma, but then not much difference between the short gamma and long gamma. This was not the case when we started the day. It changes as per the auction changes. So here you can see 26,000 was short gamma, but 26,200 was long gamma, and here we had almost 3 peaks in the B period. And little later in the day was when it began to become a short gamma, and it became short gamma because we saw the market continue to be in a range, and here 26,200 started to show us long gamma, and which held on to into the close, and that is where the 26,200 put gave us a good trade after the noon, the G period move. So same thing with gamma density at the open. You can see how it was at 26,100, the convexity zone, and the density was at 26150. But as the day progressed, we have seen a drastic change in this, and for now the convexity is now at 25950 and the density is at 26,100. So if both of them are pointing to the same level nearing the expiry, we know that we can have a pin effect. The index will have a good chance of closing at that level if both of them point to the same, and this keeps getting steeper. But that is not the case for now, so we will have to keep this combo open and see how the inventory is changing or shaping up for the Tuesdays, which is also the monthly expiry. It is definitely going to be an interesting one, and this is one very good tool you need to have with you, so that you know you are not shooting in the dark. You are aware about what inventory changes happening in the bigger market, bigger place. So this is the gamma density and the convexity chart, as well as the gamma exposure. Let us now have a look at that micro balance of Bank Nifty, which I was talking about, and see what a beautiful setup we had today. So what was that beautiful setup? Bank Nifty gave us this breakout from this micro balance. This was the Muhurat day trading, so we can kind of ignore it, but still you can say it never broke below this micro balance low. Today at the open, we opened at the upper end of the micro balance, and here is where when we broke above this micro balance. So you can see the range is 337 points, and this is roughly around 58240. So 58240 plus 337 is 58577, and today's high is exactly around the same level. So you can see how this micro balance, which gave us this breakout, has given us exactly this 337 points to the upside. And what has it done? Once it came back into this micro balance, it has broken into this, and it has almost gone on to complete the 80% rule in this micro balance. So this is how you need to look for the micro balance. You need to see where the ranges are of the micro balances and mark the upper range and the lower range. And once you are getting a breakout or a breakdown from the micro balance, look for that target to play out as per the range. So this is how we need to make use of these tools, guys. These are, I think, one of the best combination you can ever get for trading, and this will not only answer all your questions, but it will also confirm what the bias of the auction is. blindly, you don't need to have a bullish or a bearish bias. The information will keep changing, and today was a classic day for that. We opened with a gap up. We were bullish for the first hour or so, but then the failed attempt to make a extension higher change the entire structure. And in the afternoon, we saw that confirmation, not just in the order flow, which showed us a IS15. It was also seen in the VolumeX, which showed us the put VolumeX swiping above the call. And then we also saw a micro balance breaking out on the downside in the Nifty futures. So this is exactly why we want to emphasize why you need to have a right process and the correct tools, which will give you the independence to go for good setups, and it'll make you understand which are the good setups, which are the ones which will you can benefit most out of. So this was what we were looking at for today. Before I end this session, we have couple of very important announcements to make. We have a Diwali offer which is going on for both charts as well as the VLD. So you can go to the link charts.vtrender.com/subscription, and you can avail a flat 40% off on Elite annual plan. You have other discounts available on the other term plans also for monthly, quarterly, and half yearly, and they are all valid till tomorrow. So if you're looking at making use of only the chart section, this Diwali offer is going to be there till tomorrow. Make sure you are able to make use of this. The link is charts.vtrender.com/subscription. This is for the Vtrender charts, and you have the description of what the plans are about, and we'll definitely want you to go for the Elite plan because that is the one which is getting direct uh, connection from the NSE servers, and you have all the tools available in that. So this is as far as the charts are concerned. You can go through the different plans, you can study what the features are, and then accordingly take a call. You have the code right at the website, elite_Diwali, and you can go for whichever plan you want to opt for. So after apart from the charts, we have another couple of plans for people who are interested in gaining more knowledge about the market profile structure and also the also live hand holding. So for this, we have this link vtrender.com/shop. So the first option is our Vtrender mentoring room, where you can trade the market like a professional trader. We showed about today's session about how we saw the market on today's session, right from the open type from the in the order flow along with the VolumeX chart, and then the spectrum inventory changing hands. So that is what we discuss live in the market. We have audio sessions every day at 10:30 to discuss the open type and the probable setups. We mark out important levels, and then as per the break of that level, we then take action about it. So if you want live handholding, the Vtrender mentoring room is for you. We have live trading session, market analysis. We also develop trading strategy development, and we have a professional guidance throughout the day, all through the market. And if you want to do it by yourself, you have the derivatives mastery e-course, which is a self-paced, self-learning module, which you can go as per your speed. So you can go to this link and go for any of these options. You can go through the details. You have lot of resources available in the website if you need to clear out any terms or any other doubts which you have, and you can look into take advantage of this. We have an offer running also for this Vtrender room, mentoring room. For new members, we have a straight 25% off. Diwali 25 is the code for that. And for old members who have not been able to join back VMR, this is a golden opportunity for those guys to come back. They are getting a straight 40% off on all the VLD plans. So make sure, if you are very keen, if you understand how you can use these tools, and you can join us live in the trading room, where we do this every day, day in and day out. And we not only discuss them in the audio session, we also make a review about what we have done in the on the next day. So it is going to be a continuous learning curve, which will only keep getting better and better. Yes, this is definitely only for the serious minded traders who want to make a career out of this. So for new members who want to take up this, Diwali 25 is the code. You get a 25% off on all the monthly, quarterly and the annual plan. Whereas for members who have been part of VMR before, you straight away get an extra benefit and you get 40% off. The code is Diwali 40. So all said and done, in case any of you guys have any queries, you can ping me. You can get in touch with me either on X or you can even WhatsApp me. I'll just share my WhatsApp number here. So in case you have any queries, you can just message me on WhatsApp and I'll be happy to get back to you. So this is once in a life, not a lifetime, but once in a year offer which we roll out. And this has come at a very festive time, and it has also come at a very important juncture because we were very close to making an all-time high, and today we have just left a failed auction, and we know how the failed auction, what importance the failed auction has in terms of market profile. So even in fact last year in September, when we made the all-time high in Nifty 26277, there also we made a seaside extension and we left a failed auction, and that failed auction is not yet visited. It has been more than an year and a month. So I'll just repeat my WhatsApp number. It is 90362 79747. So in case you have any queries which you want to clear out, you can just WhatsApp me on that number and I'll be happy to answer them. So this offer is valid till tomorrow, guys. So make up your mind and make sure you have a great start to this new somewhat year, and we make good progress in the trading for the till the next Diwali comes up. So that is it for today. Signing off for now, and have a great evening, and looking forward to catching all of you in the next session we have. Thank you guys for joining in, and have a great evening.